David Nicholas joins us. Straightforward question, David. Do you think the Fed is preparing for a quick rate hike anytime soon?
Well, Stuart, emphatically, yes. I think we should expect that the Feds are going to hike rates faster and earlier than expected. I mean, if you just look at the recent FOMC meeting, that's an 18-member committee. We were 2 votes away from pulling rate hikes into 2022. That's 2 votes. That's not exactly an overwhelming defense for keeping rates lower and longer. And if you just look at the sentiment from this FOMC meeting, and I watched it closely, Stuart, the sentiment was all about tapering. It was all about when are we going to hike rates. I mean, even Bullard came out and said that we should be ready for an upside risk to inflation. And I couldn't agree more. And the market right now, Stuart, is saying that, oh, inflation is going to be temporary. This is going to go away. Things are going to get back to normal. But I've got a feeling that the government is going to screw things up. And you know how they screw things up? We do it with another stimulus bill. If we get a $2 trillion infrastructure bill this year, that could make temporary inflation permanent, and then the Fed has to play catch up. I don't think the market's pricing that in, and that's why I've got very real concerns about the rate hike schedule going into 2022.
So you wouldn't be jumping into stocks at the moment?
I think you got to own the right stocks. I mean, don't overpay for
overall,
stocks.
David, overall, look, we're asking the question here. Where do you stand on the stock market? If you think the Fed is going to be raising rates earlier than most people think, I presume that means that you're going to put a lid on the upside movement to the stock market. That's where you're coming from.
No question, but I'll be clear. 2021, the risk is off the table for 2021. So I think that bodes well for tech. I think it bodes well for equities. But let's not have this 2023 talk, okay, Stuart? 2022 is the year where we got to be looking at for rate hikes, and the market's not pricing that in.
Does it make any difference to you that Bitcoin this morning dropped below $30,000 a coin?
Well, I think this is a geopolitical issue. China does not want any other person or entity to have control over currency that they can't manipulate. So I think it's something that we got to watch, but I still think Bitcoin is a great hedge for inflation. But we got to be careful in the short term because I don't think the downside selling is over just yet.
David Nicholas, good stuff. Thanks for joining us. On your screens right now, of course, left-hand side, Bitcoin is $29,600 a coin and Ethereum is at $1,700. And there's a big difference. Hey, Mr. Nicholas, thanks very much for joining us. We'll see you again later.